Check 1, 2. Mic check. Check 1, 2, mic check. Good morning out there. How y'all doing? Not on. Not on. Turn that on? No? Can't turn that on? Okay. Turn that on. Turn that on. Turn that on. See if we're there. Good morning. How are y'all doing out there? I'll bring the show up for you as quickly as possible here so that we're not messing around. I'm sure you got. Sorry for being late this morning. Had some admin stuff to do this morning in the background. Had some stuff to do in the website and in the Discord before I got the Discord or before I got the show up. So we'll just head right over right away. And I will get you guys. I had a hard time. I couldn't log into the website last night because the two-factor authentication had lapsed. Well, no. I had multiple two-factor authentications, and then I deleted them all, and I didn't realize that I only had like 48 hours to reinstitute two-factor authentication. So I got locked out last night. And so I did post a brief for you and pinned it in the Discord. Just a note. I have to update this, and I haven't yet. But I had some short puts that I forgot 2 days in a row. I was trying to close them 2 days ago. It's a bullish trade, believe it or not. It's like a leftover part of a bear put trade that I put on right before I went on vacation. I closed the two bear legs, left the bull leg on. And I meant to actually close. It's not like I planned to let price run to where it is to get out of that trade. I can't take credit for it, but I did leave the bear leg on, and it printed fat and hard. So I'm happy for that. I made more than I expected on that trade. It was a pretty big trade. So if any of you have been following the big trades that we're making, we took a large bear ratio spread heading into like literally on the top on the Thursday before Labor Day. Then we closed literally on public, closed the bear side at the bottom tick. And now I was like, I'm going to leave the bull leg on for a day or two on this bounce. The first day passed, left it on. Now, 2 days ago, I forgot to close the goddamn leg. And then yesterday, I forgot because I'm so wrapped up in the show and trading and all that other stuff. So, I was in the close last night, and I'm like, oh, I can't believe I'm doing this. Like, how do I forget this stuff? And what it is I place, I have a day trading account. I have more than just a day trading account. I've got like a stock brokerage, then I've got a spread brokerage, and then I've got a day trading brokerage, and I keep them all separate. The intent is that I keep them separate so that I don't stare at them all day long. But I have forgotten trades. I've forgotten more trades, though, that have gone against me than for me. So this is unusual. Normally, I'll leave stuff on and I'll forget it's even going. Like, I literally will forget. I won't set an alert to check. I've lost some big trades. Or not big, but I've lost like, $3,000, $4,000, $5,000, $10,000 on trades because I don't know that they're on. Sometimes I'll find brokerages that I still have that have money in them. I haven't had that happen in a while, but this is a prime example. I forgot that I'd left a trade on, a leg of a trade on, and did not close it. Thankfully, it went in my favor. So I'm stoked. I actually did very well. But not only that, I could have been in some trouble with margin. I could have been in some major trouble. I could have got a margin call and been in some trouble. So, anyways, a lesson to you out there. If you are like me and you place some trades on brokerages and you close the laptop on them, I do. And do you know why I do that? Because I don't want to manage the trade. If it's like a 90-day trade or a 30-day trade, I don't want to look at it unless we hit price targets or time. And now this one, I hit the price target that I wanted quicker than I expected. So I was like, I'm going to close the trade down. Then I'm like, we're so fucking deep, we're going to turn around. You can't go this low this fast and not turn around. At any rate, the stupid things that we do. Or the missed details that we do. So we hit our first target. At any rate, I couldn't get into the website last night. I did write a brief last night. I did post it on the Discord market chat. So if you want to take a look at it or haven't seen it, it is there. If you ever have an issue where you don't know where I am in my trades, or anything, I do at everyone's. So what that does, in Discord in the market chat, I will do at everyone's for trade ideas. If I'm long, I'm short. If I'm long and short, important market data, that kind of stuff. White papers, any kind of discussion that I it's any kind of discussion that I'm trying to disseminate so that we're all same page. Now, you could disagree with me. That's fine. I don't expect you to agree with everything I say. But if you want to follow along, you should read those things so that you're at least following along rather than saying, hey, where's is Cap long short? You just check that at everyone in the Discord because I have so many people to speak to. We got thousands of people that we speak to. So it's hard to answer each person's request. One-on-one, I can't get, we wouldn't even have a show, right? So try to, I think you can set I think in Discord you can set create or have any at everyone text you to your phone, to your email. There's simpler ways. You can just type in a search box like at CaptainJimJames, the real CaptainJimJames, and then scroll through every morning or have an alert set up on your phone or whatever, but at least it keeps you in the loop. Now, I noticed something yesterday in particular, and this isn't negative at all. From time to time, we have new members that roll into us. We're growing quite fast, growing faster than I want to grow. So we have people joining us in our community. And so from time to time, I should be updating the community just so that everyone understands basic concepts that we talk about. So I think this morning for just about 5 or 10 minutes, I'm going to go through some of those basic concepts so that everybody's same page. And yesterday is actually is a good example. and we're going to talk about that stuff. So, so just some basic concepts. So, at nighttime, I give out a brief, and I will draw in expectations for the next day or the next week or farther out in time. Pro traders get 4-hour and daily updates. So time frame matters. Let's start with that. So if I give you a chart that's a daily time frame, well, let's go down here. We'll look at I guess TLT is TLT a good one? No, we did something that moves a lot. Maybe Nvda was a good one. That's been moving a lot lately, right? Yeah, it's a good one. So let's use Nvda as the example. This applies to any chart out there, especially charts that move. But let's take a quick look and see, just so that you're all on the same page and like, I get it, right? So, nope, wrong one. We're going to go to this one right here. This is actually a good one because we got a lot of movement in here. If we're on, let's say we're on a daily chart here, right? And you get a chart for me as a pro trader, right? And let's say this chart is, like up here, let's say, right? Boom, right? Something like that. And then boom down here. Something like that. Let's just say it. Just say it's like that. This wouldn't be what it would be actually, but that's okay. As a matter of fact, that count is wrong, but I guess we'll redraw it here. We'll do something more close to what it would probably be like. Yeah, something like that.
Just note
that's good.
Further to reports of outages.
So this is a daily chart, right? This line right here. If this like moment here is like 2-3 days of movement, right? We could drop 2% in this extended forecast, right? If you were looking at a daily time frame chart of looking like something like that as an example, if we were to scale down to a 4-hour chart, that it might look like something like this, like way down here, something like that, right? And then if you were in a 1-hour chart, it may just look like tag, something like that, right? So as you get more granular in time frame, go from one day to 4 hours to 1 hour, etc., you're going to expect more detail within that chart. Now let's look on a lower end detail here. This is a good one actually for this. So let's take a look also at a few other things. So if we're at like on a 1 hour chart, let's say, right? If I write a 1 hour chart for you, and I'm looking at a 4 hour here, and when I'm doing my briefs at nighttime, I'm looking for where are the real sellers. So I know there's real sellers here, right? On a 4 hour basis, right? I know there are major sellers there. So let's say last night I drew into, or actually, and let's do another one higher. Let's do one more higher. This is an example. Don't be like, oh, this is where we're going. This is an example. So let me see. Well, we'll make that one yellow. And we'll make this one the doom one right here. Okay. So let's pretend that I think we're going to all-time highs, right? I'm like, the thesis here on, for me at least, velocity looks great on daily, velocity looks great on weekly, velocity looks great on an hourly basis. We're ready to make a move to all-time highs on Nvda. pretend that's my thesis. So I go, you know what? For tomorrow, we're going to go all the way up here. And so my thesis is Nvda is going to all-time highs, right? If I were thinking that we're going to roll here, I would not beat the yellow line, okay, and go down. Does that make sense to you? Not beat the resistance point, okay? If I thought we were going higher from here, I would draw the line in like this. Hey, we're gonna get a new high right here, right? Fall back down into the hourly for support, right? And our next target's up here. That's a lot of work to get up here, right? We'll likely fail this in my view. Or let's say we get all the way up here, right? But we need the hourly to help. We're not going to break through major resistance without the hourly trigger. So we're going to come all the way back down here, believe it or not, and wait for the hourly trigger to catch back up to us, right? And then we'll make an attempt, and we will fail here. Come back down, and eventually, let's pretend that's it, okay? Now I look at it, and I'm like, it's 4. That's like 4. 1, 2, 3, 4. I doubt we actually do that. So maybe we just squeeze right up here, okay? Yep, hold on here. So I'll redraw it right now. No, you know what? Forget that. This still works as an example. So what this is telling you, if you're a new member, new community member, is this is the path, right? If we come into, let's say, pretend this green candle's not here, and let's pretend that we come into this morning, and you've got the market brief, right? And you see price come up here, and it fails before we break above resistance. Even if the market brief at that point is no longer valid, before we even go down, it should imply to you, hey, Jim is expecting a new high on this resistance to go higher. We did not make that new high, right? So that would invalidate this entire path, wouldn't it?
10:25 p.m.
Right?
a.m. Eastern.
We didn't get the new high. We're definitely coming back down to retest the hourly trigger right here. And we'll likely lose that trigger. If you want me to, I could add to the briefs where it invalidates. So like this move here, right? Do you know where this, if you failed this, do you know where the invalidation would be? If you immediately failed that, you'd likely break below this, and you'd go all the way back down here to retest this low right here. If you broke through it, bad news. If you bounce, we can actually start higher. If you close the gap here and turn it around, you could go higher. Does that make sense? So I think new members sometimes think, he's furrowing. He's projecting this will happen. And this is like, if that fails, we're screwed or whatever, or he didn't get it right or something like that. Not the case. I will oftentimes draw things like this. We should roll down here, fail, and come straight down. Bam, right down there, right? Whoop, hold on there. Now, if we come into today and I've got us rolling down, and you actually see the break above, that would tell you that this is invalid, right? We might come back down, but we are heading higher. You need to make assumptions about the market, right? Do we reject resistance or support? Do we reject or break through it? Do we break through and consolidate? Do we break through and immediately reject? Do we break through, consolidate, and then they're just waiting for more momentum to get us higher? And you have to think about those things at each step along the way. And when is everything invalidated? Whether you're going higher or lower. And I have an example from yesterday, too, that I want to talk to you about. So we're going to look quickly at SPY yesterday. I had someone post in the Discord. They said, "What about that last leg down?" And I don't think it was like negative or anything. Just asking like, why are we turning around and why does he have the last leg down? So we want to look at that right now too. So yesterday, we had a gap to fill right here. We had a gap to fill. Let's take a look at it.
Taking a look at the fear and greed index, 40 out of 100 equaling fear.
Where are we at? Why are we so far away from this?
31 out of 100 also equaling fear.
So right in here.
Currently down at 0.45% at 17.
We have a gap to fill in here, right? And we turned around earlier. Okay, but we didn't get to fill. This actually wasn't. This is here now, but this was not here yesterday. This was actually down here, I believe. And we didn't fill that last little bit of gap. Now, when we were in yesterday, let's go back over here and look at yesterday. Let's get rid of this for a minute. We don't need that here. When we were down here yesterday, right? I think don't quote me on this, but I think that I drew something like this. Something like this, and then I move higher, right? We're coming down, we're turning, and I said, we'll probably sell this and move down lower just to get that tag down there, right? Close that gap, or at least the top of the gap, right? Which is right here. It's the top of the gap on an hourly basis. We're on a 1 minute chart right now, but that is the gap, or that's the gap plus leaving a little bit of gap behind. What's important about this isn't so much the up and touch. It's that, let's say this could be in the inverse too. If we're at resistance, not support, you're still looking for, do we auto reject, right? Do we break through and come back up, right? All these different things. Same on the top side too, right? If I inverse this chart, it'd be the same fucking thing. But someone's asking me that, and I'm like, wow, are they short here? They shouldn't be, right? If I were to make this in an inverse,
time. We will be on the lookout for
trigger screen.
Just note, Jordan, his last meeting will be that confab due in 2 weeks.
Transfer. There's two things about this. Number one would be flip vertical.
Mandate of the S&P is to price stability. He was talking about
first thing here would be
precondition for growth.
you should be getting out of your shorts anyways, right?
Early to recent inflation.
You shouldn't be like getting short right here, right?
He reiterated that the main
like this is where you get out of your trade, right? Yesterday, I told you we're going to roll down, right? Gave you the 3 targets to the downside. We're so close to the bottom. This is not the place to be getting long, is it? If we were going higher, this would not be the place to be getting long either. You either be leaving runners on from lower, maybe you leave a few runners on, or you can lose that trade. Doesn't matter. And the other thing too is you're looking for, do we not make it? Do we hit it and auto reject? Do we break through, consolidate, and then go higher? Do we break through, consolidate, then begin to make more lows to go lower, which is higher, of course, in the inverse? I've got this inverse for you so you can understand it from a reversal type of a thing. So, but let's look at this last little part right here. There's another thing for you to be thinking about. If you're coming into known support or resistance, right? Known support or resistance anywhere, right? Anywhere on any time frame, and you're like, hey, I'm expecting that last little bit, and it doesn't, it begins to turn, you can actually see the reversal here, can't you? You can see the reversal on the 1 minute, heading higher, right? And then, so you know that you're not going down there once you're above the 1 minute trigger. And then further to that point, you can see the bull reversal right here. Do you see it? So this is a bull plane right in here. They even give you a chance to get out down here. So I want to show you these two parts here. Important lessons in trading. Very important lessons in trading. If you were a bear yesterday, right in here, and let's say you got short right here. Oh, hold on. Let's say you got this signal right here to get short for this last leg down, right? You should have been short right about here, right? If you use your rules, right, you broke down through support, right? You got the new low. And what is that a signal for you to do as a seller or a buyer in the inverse? Long or short, right? There's the last failure. You're now short right there, right? Bam, to the downside. Make sense? And you already know where the next level is, right? So you're like Johnny on the spot right here. Bam, to the downside. Woohoo! Everything's awesome. We're making bank. As you're even down here, this is where the money shot is. This is where the danger is, right? And this is where the FOMO is. Danger, this is when you lose all your money. This is when it's confirmed for the next leg down. I assure you that if you were short here, you would close this before you ever got to touch this or break through. You're like, fuck that, I'm out. I just made 300%. Like literally this trade right here, you up or down is about 100 to 300%. It's a huge payday for you.
Fuel going down and revenues.
Now let's say you didn't close. You're like, I want that last little bit. I want that last little bit. Right? Or Captain, I was too scared here. And now I'm trying to catch that last little bit. You're going to lose all your money 7 out of 10 times. But if you were to do it up here, right, where you're supposed to be trained to do it, and let's say you're like, Cap, I did this correctly. I got greedy, Cap. I wanted that last little tick. I left some runners on, Captain. You'll notice that immediately on the reversal, we went above the 1 minute trigger, and that's your first sign of, oh, fuck. Right? They tried to slam it back down and failed.
We get our weekly.
Brought it back up here. Whoop, whoop. And I want to show you this, like right here. See that last high right there? That high gives you your first out if you're short here. Your first opportunity at getting out short is right here. Bam. You should have gotten out right there because you broke this prior high to the upside. Now, let's say you didn't get out. You head back up here, whoop, and now you're on fire, right? Your shorts, your puts are all on fire. Worst possible place to get out, isn't it? They give you another opportunity to, like, you literally have one opportunity and two opportunities on this trade. You had the first opportunity to make some bank. You had the second opportunity to not get FOMO'd up. Right? And we'd been burning all day long, right? We were down, I think, 2% at that point. Right? And then you're still given a chance to get out here and here. Now, let's say you follow all these rules down here, right? You'd be doing pretty good. Now, here's where it gets fascinating.
From 3M
Afterwards, we have a reversal, don't we?
Pre-pandemic on pricing.
We have a bull plane that forms. We're down 2% in the day, right? We have a confirmation back test of that bull plane. Wham! And we start heading higher, and right here, that's all you needed to know. You're out of short. You can see the prior high is beat. You can see the bull plane. At that moment, if you were short from the top, and if you don't know what I'm talking about here, you should come back to this part of the program and write all this stuff down. Hit a hammer and a nail in the wall at your house and have those rules. And every time you're questioning, Is it going down? Is it going to flip here? Is it going down? Is it going to turn up now? Is it going to turn down? Has it been validated? Invalidated? This will answer your question or questions about 70 to 85% of the time in the market. If you can be that aware of the market, it'd be rare for you. You might get cut up here and there. You might get blown up once or twice, but in general, you're going to save your ass 70 to 85% of the time getting run over. And you're also going to make bank committing to those trades when they go down. And you're going to close way before it ever gets risky for profit. So I saw people on FinTwit yesterday that were like, oh my God, I got all fucked up. And you could actually see some other things here too yesterday. So you could actually see we like raced all the way up in here, right? We came into the hourly trigger and the hourly velocity was turning. Right at that moment yesterday, we checked velocity on an hourly basis, and it was like full-on negative 50. It started making new lows, like negative 45, negative 40. And the moment you're seeing that, you're then seeing a successful backtest of that turn right here. Bam, bam, right here. Bam, bam, right? We took a long there yesterday together, remember? And it was primed to go higher. Like the pump was pumping. So if you're new to the community or new to the Discord, I see you asked those questions yesterday, there's a bunch of information in those briefs. Like, are we going there? Another thing, too, would be this. If we, in the briefs, if you see me write something, let's see me write something like, I don't know. Say I write something like this. We're gonna go all the way down here, right? Hold on.
10 seconds.
We're gonna go all the way down here, then we're gonna go right up here.
Build.
Then we're gonna go down to the depths of hell, right?
40 BCF, lower than the expected build of 48
Doesn't look like any
BCF.
Texas hit from Jordan just yet.
Some of y'all out there are like, well, what about that last little bit down there? It's like sometimes we're gonna go down there, sometimes we're not. Where did you get short? Did you get short up here, or did you get short right here when you felt good about it for the last little bit, right? This is valid. It's done. And let's say you were long in here and you got out, and we're like, yeah, we're going to roll down right here. And we don't. We go higher and validate an upside move. You have to be ready to take that upside move, right? That's the other part, right? And here's one last thing I want to talk to you about. When you're trying to long or short does not matter. This is specific to yesterday, but I went over this 2 days ago. 2 days ago, I went over this in the stream. And that was validating going long or short. So we're going to talk about that really quickly here, too. Move all this. We're going to go to just a blank screen. We're going to make it fairly simple for you, okay? So Mr. Yen talks about this. He's famous for this. One right there, one right there. So if the market's going higher, right, into known resistance, pretend this is resistance right here. Okay. And you see price come up here. A lot of you try to time the reversal. Like doom and gloom right here, right? Start selling it. You get cut up, right? It goes higher. Right? Oh, shit, my shit's on fire, right? Goes all the way up here. Bam.
Futures
right?
rising.
Or even if it goes up here. Wham. Or even if it's going to roll down here. Doesn't really matter, does it? As a seller of that resistance, this works on the inverse too, by the way. As a seller of that resistance, you're not attempting to short this, or this. You're actually not attempting to short that. You should just be sitting on your hands and watching price action. And there's a reason for that. I'm going to show it to you right now. So in all three examples, you are going to be above the 1 minute trigger. Okay? If they backtest that 1 minute trigger and they're successful, we're going higher. They backtest it, we're going higher. If at any point we break the 1 minute trigger, any point, if we break the 1 minute trigger with price, this starts to turn down as an example, right? You would see that there's a 5 minute trigger underneath, also following. And you're still not short. You're going to wait for the bounce and the rejection on the 1 minute trigger. The 1 minute would begin to roll. You would have the lower high within that, right? You would then see excuse me.
Gas storage change for the week is 6 sept, expected to post a build of.
You would then see the failure and the new low right here, right? And then you would see the next failure from demand, right? Demand higher, demand lower, demand lower. And you've got this like consolidation trap in here, right? Just like that trap above. This trap could be here, here, or here. And you're just still patient. You're just watching. All you're doing is watching. Now, even right here,
10 seconds.
The bulls can escape and go higher. You don't want to be short there either, do you? That's how you get your bull traps, bear traps, that kind of stuff. But you are Johnny on the spot as a seller with your finger ready to hammer the sell button, long put button, whatever it is you're doing. And you're just waiting for the roll over and the new low. And the moment you see that, you're like, bam, bam, bam. Maybe one more quick up pump, right? Whoop. And you see the failure start on a 1 minute basis, and you're just like, I'm hammering that. Bam, 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 down at depths of hell.
Geopolitics. President Biden will be hosting a quad.
Now, let's say you do everything right, and it still squeezes up on you.
White House announces.
You're still managing that trade like what I discussed with you earlier. You're like, Captain taught me this, and it went poof. And now your shit's on fire, right? Well, just like earlier, what I showed you earlier, you're still given another chance to get out. They fucking still give you another goddamn chance every time. They run it right back down to where you got fucking short before, and you've got the new high up here, and you're like, oh shit, they're gonna run it up. So you don't get emotional. You get out of your short or your long puts, and then you turn long the market, either buying SPY or whatever your symbol is, or longing calls, whatever it is you're going to do, and boom, off and running. And this whole thing can take place here, here, or even here. So if we're coming into support or resistance or whatever, that's a lot of volatility, isn't it? There's a ton of volatility. You don't want to be in that shit, do you? At any time, you can get wrecked. So you need to be like initiating trades that are proving themselves. You need to also learn emotional discipline. You also have to have market awareness on higher frames of time. And you have to be able to commit to the trade so that you're given space to be wrong later. That's a key part here. A lot of trades, you're like, wow, that looks really bullish. It's been going up all day long. Or that's really bearish. It's been going on down all day long. I feel good. I want to get that last little bit finally. That is an emotion and a feeling that is counter to how you trade to make money in the stock market. when you're most fearful, but you can rely upon basic tools that tell you to go against your brain. You're like, oh, it just did that. And it just did that. It didn't do that, so I'm waiting still. Oh, it just did it. And your brain's going, don't go short there. But every rule is kicking, right? You got to do it. You commit to the trade, to the downside. And you know if you get blasted that you're going to be given another chance to get out so that you can manage your trade appropriately. You'll often see when I lose my biggest trades on this show, it is when I break those rules. There are members here that have been following me for almost 4 years now, and they can attest to you that I have blown up some shit on this show. I have blown up 30, 40, 50 grand in a trade in about 5 minutes. And when I've done that, it's always when I break those rules right there. I don't do it like I used to do it. I used to fucking throw money around like it was stupid. I've gotten better at streaming and trading. I'm doing it 4 years now. I'm not just trading for me and only taking the most choice setups. But I have a lot going on, right? I got Discord and admin, and I got engineering stuff for the show, and I got the talk to you guys, and I have to execute and close, open and close trades. But you out there at home, you really want to learn these rules on every frame of time. You want to be waking up every morning and checking higher frames, daily, 4 hour, 1 hour, right? You want to get down into the nitty gritty on a 1 minute chart or a 30-second chart or a 5 minute chart, whatever you're trading on, 15-minute chart, whatever it is. But these rules work on every single time frame. And they collapse all the way down into the time frame you're trading on. You'll still see these same setups. It's like a spiral. It's like Elliott wave shit. It's fractals. And they go round and 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 round into whatever time frame you're trading. So I don't go over this often as often as I used to, but I want to go over it because people get caught blindsided. They're like, well, what's going on? I'm like, where's third? Who's on second? What's on first? Where's third base? That kind. 2 days ago, 2 days ago on this stream, everyone was bared up. And I stopped the stream, didn't I? I said, give me just one quick second. I want to see where we are on a 4 hour basis. And we were touching a 4 hour basis, right? And I was like, I think we're going to turn up here, and I know where to cut my losses there. And then yesterday on the 4 hour basis, I said, we're not ready yet, are we? So it might not be the 4 hour basis, right? I have to look at all these different time frames, daily, 4 hour basis, and then I also have to look at prior resistance and support levels, right? Did that 4 hour candle yesterday match up to the gap down below? No, it didn't. Did the 4 hour candle match up to a known resistance point the day before? Yes, it did. Was hourly velocity turning up 2 days ago? Yes, it was. Do we begin to make a reversal sign of the up? As a matter of fact, they tried to trick me out 2 days ago for 1 penny. And then what? I knew I was right. And we didn't bloodbath. We started going back up. What did I do? I fucking hammered the buy button again, didn't I? And I made a bunch of money. I didn't make a ton, but I made a bunch of money. The trade was good, validated. They were trying to fake me out, and I was still boom long, made 100% trade. If you're not good at that stuff, paper trade this. You don't need to be trading this with real money. You can open, I don't know, I know David AMS has some accounts that he paper trades on. Get with him. He'll tell you some great paper trading companies. We're developing one right now, but you should be trading these rules with paper until it becomes second nature. If you can trade these rules and make them become second nature, you'll become a much more successful trader. You'll know where the turns likely are, and if they go against you, how to cut your losses so you get a paper cut and not a blew up my account. Make sense? And I'm only bringing this up because yesterday I had 3 or 4 people ask questions, and I was like, they must be new members. They have to be. And I didn't see anyone offering explanations to them, so I was like, well, I guess I'll do it on the show. So I just want you to know that. Price action is king. We can make plans all day long. I can make a plan. You can make a plan. Plans go wrong. This is a stock market. Stock market is intended to get you wrong. 70% of people year in, year out blow up their accounts. There are people every year that don't. You might have 30% added to the new 30% the next year. They last. But then you got like 90% that don't blow up an account for 3 or 4 or 5 years. And you got like 3 to 5% that don't blow up account for multiple years. Now, is that okay or not okay if you blow up an account? It is okay if you blow up an account. The key here is that you remove your money from the stock market and you invest it somewhere else that is less risky. So if you, let's say you're like, well, what if I'm not a great trader, Cap? I'm in the 70% cap. I go to work every week, Captain, and I suck at trading. So I get my paycheck, or I go to a prop firm. I know what some of you do. You put in the $500 or the $300 or the fucking $250 or whatever prop firm's charging you, and you roll the dice every week, right? How many of you, when you do that, take the money out of the goddamn stock market and start over again? I'm going to bet most of you don't.
Just for the LATAM energy.
And that's the other side of this. It doesn't matter if you do get blown up. What does matter is when you are hitting, that you remove that money and you put it somewhere else that will build an account for you of money that you can use to retrade again. So if you're able to pull out 100 grand, 200 grand, the next year you get 300 grand out and you park it somewhere else. Maybe it's owning SPY, maybe it's a high interest account, savings account, or some bills or bonds. And you're getting a check every month or every year, every quarter, right? Maybe you're selling options against it. Maybe you're getting dividends. And that funds you so that if you do blow up an account, you can come back to the table again. Does that make sense? That's not what we do, is it? Hit the lever, boom, I just made 100 grand. I watched the guy in Wall Street Bets last night. He made 300 grand trading. There was a bunch of people yesterday that made 6 figures. And there were people the day before that made 6 figures in our community and on Wall Street Bets. And I didn't say anything on Wall Street Bets, but it's like, are you going to take that 100 grand out and start fresh again? The answer is likely no. You're going to give it all back. Are you going to put that 100 grand into some SPY? Use the dividend to enter the market? You do that for like 2, 3, 4, 5 years, you're going to be always self-funded. And every time you hit and nail it, you can remove that money from the stock market again and persevere in this market, whether you are the best trader or not the best trader. The other fun part about that is if you want to actually gamble, you can. I feel like, you know what, I'm going to go in there and I'm going to get some of these 0 dates on this. I'm going to go into a FOMC and I'm just waiting for that first dip down and I'm going to slam down 10 grand on some 0 date calls. Woo, ride it up. You can if you're self-funded, can't you? If you've been doing the right thing for 2, 3, 4, 5 years, you know you're going to get another check at the end of the quarter, right? No one's taking that away from you, are they? Yeah. And here's another fascinating thing. I got one more question yesterday that fascinated me. I got one more question, then I got a few other questions surrounding it. Cap, we're out of the range that you predicted. And I checked. We had the 11th largest intraday reversal in history. The 11th. We don't draw charts or make expectations for that ever. If I were to make you an expectation for yesterday's price action, that came true, right? I would be wrong 99.999999999% of the other time, right? Now, we did make a prediction yesterday, didn't we? On the show yesterday morning and in the Discord, we talked about what? The data that came out and that it was 9/11. I talked to David AMS yesterday early morning in the Discord, and I said, expect some volatility because of that print. We may get the down move on the opening bell, but still come raging back to print 556, right? What did we print? We printed 555.37. Shocker, right? We actually verbally, before the open yesterday, said there's a high probability that we go down negative 0.75. We went more, didn't we? We went way more. And we'll probably print 556, and we got close to it, didn't we? So as the data comes in and you make predictions and you do due diligence for a plan, if things change, you adapt to it with price action. Make sense? If it goes deeper than you expect, you chase it. If it goes more than you expect up, you chase it if it validates itself with the rules that you have. Does that make sense? Your thesis or if you're like, hey, I got a bare thesis, I don't know. We're going to zero. If you ever meet anybody out there that's like, I don't know, they tell you that we're going to zero, right? And they mean it. If price starts to go higher, you would expect that person to take the trade higher, right? Even if they have that thesis. If you can make that assumption, you're going to be successful in the stock market. Like, hey, I've got a plan. I think we're going to zero. It's turning up on me. You're insane to stay short. Insane to stay short. Yesterday's program, towards the end of the day, we discussed the reversal and its impact. And that market structure was changing yesterday in the last half of the day. Assumptions for a reversal at the top were changing to, we now have a green weekly candle, don't we? We have this now. We have that now. You can adjust and modify your thesis or where we're supposed to go. And the bears still had yesterday, even into the bell and on this open this morning, still have a way lower. They still, believe it or not, on this open had a way lower, although that door is closing. They did have a way to go lower, and they still do right now have a way to go lower. In my view, they do. But at any rate, be willing to make a plan. Be willing to, if it goes counter to your plan with price action, to chase when you need to. That's up or down, doesn't matter. Or hedge, any of that kind of stuff, so that you can make bank. Does that make sense? The only person I wouldn't trust was the person that's telling you it's going to go to all the way down or all the way up, and they don't change their positioning or their trading or execute properly or time it properly, that kind of stuff, or take the reversal and move forward. Trust those people. If they can do that, then they're going to make a lot of money. And money means more than anything. Money means more than internet cred, means more than being right. The ability to adapt means so much more than being right. You could be wrong on every plan you have, every single time. And if you can adjust to being wrong, you are going to be a successful trader. Make sense? All right. All right. What else I got for you? You guys have the expectations from last night, I'm assuming. Let's take a look at them as a group for today. I didn't get to do a complete brief last night, so we're going to look at it together, all right? And some stuff that happened yesterday. Unexpectedly, right? Well, not quite unexpectedly. We expected yesterday to trade about 552 to the upside. And then we're expecting a leg down, right? We went slightly higher. We extended, right? And what are they trying to do right now? They're trying to roll us down, aren't they? You see them trying to roll us down? Already we hit our first target to the upside this morning. They tried to roll us down, right? We have a second target on today, don't we? And then we have a roll coming up. Now, what I want to discuss with you about that is, hold on a second here. I want to discuss why we have a likely roll ahead. We got a few things we got to look at, and the implications of what happened yesterday. Now, you might disagree with this. You may disagree with this. I'm fine with that. Hold on here. Get rid of that there. You may disagree with this, but yesterday, I posted a note from Migueligot. I like that guy. That guy's made me more money than I've lost, and he has excellent market awareness. But what I found fascinating was he put a note out yesterday, and it was like a fever dream on paper. He was going 1,000,000 miles an hour, describing very high concept theses that are all crowding and contradictory, and describing some bad things that could happen or good things depending upon your positioning or your thesis. I found it fascinating because I posted it and I said, looks like Charlie puts his pants on and takes them off like the rest of us. And that's true. And he had like the fever dream. And I get those fever dreams too. You probably do as well. We were in the show yesterday, we were talking about some of the complications by the price action that took place at the end of the day and how that complicates a lot of stuff. We've already discussed the spot up, vol up trade. We've already discussed how the door was closing into the end of the month. We've already discussed like the downside possibility. We already put a trade on for both outcomes during Labor Day, before Labor Day. We said the window's closing this week. We could still squeeze. We could come back on Tuesday and be up. But I bet if we put a bear ratio spread, we could cover the upside move. If we wake up on Tuesday, we wouldn't be burning. And if we get the move down on Tuesday, we'll make bank. Right? And it worked. That trade worked out regardless of price outcome. Now, hold on here.
They are conducting damage assessments.
One quick sec. Can I make that thing bigger or can't? Oh, I can't make that a pop out? Are you kidding me? Okay, so there's a few things I want you to know here. Number one, people on public will tell you that they shorted after the fact. That. Now, we shorted this public on live stream on Thursday at about 12:30 in the afternoon. I said, I'm going on vacation. I'm out of here. Hedge yourself. We're touching the top right here, testing the prior highs on SPY. And it was plenty. Put on the hedge, right? Go on vacation. Take yourself a break. Look where he went. Ooh, all the way down. We literally closed right here. Now, even though you see people brag on FinTwit and say they're making bank, they likely didn't get short until here or here. You can tell because of the reaction on FinTwit yesterday. They're guilty of it too. They get the end of the trade. They get scared. They get the end of the trade. They get trapped in. Whew, finally making money. I'm going to stay short now. I'm looking for the next leg down there and then down there, right? And what happened yesterday was we didn't reverse here, did we?
And just note around
they got blasted up, didn't they?
On the lookout for the Treasury's announcement.
What does that create?
Next week's rather 20 supply.
It creates a couple or it creates a couple things into yesterday. You get Charles Migueligot. You get people on Twitter, and they're burning right now. They're trapped. What happens is they have to become buyers. And until the move to the upside ends, they have to become buyers. So they're like zombie bulls is what I call them. They have to long the market. And not only that, if we trigger specific highs above, it triggers other buyers that could moon this market. And they're all roped in now, right? Buyers that are not buyers and all of a sudden become buyers. Sellers that are not buyers become buyers. And you can have an upside explosion in price just like back here. Spot up, vol up. Now, they're praying right now that they don't get these new highs, and they're praying that the demand goes away. Because the moment the demand goes away, they will automatically stop being buyers, and they will sell this down to get out of their position the first chance they get. Trust me. So, you need to know a few things here. You need to know that the moment demand ends, they're going to roll this down. You also need to know that even if they are buyers in the second half of yesterday and possibly staring in fear right now, that the first moment they have, they're going to try to roll this thing down to get out. And if they're a professional, they're going to throw the kitchen sink at it. The first opportunity, if they own $100 million in SPY, they're literally going to auto sell it just to get price lower in a low volume environment. Telling you. So, where does that leave us for like predicting or writing a plan or expectations, any of that kind of stuff? And the first one is this right here. We're going to go to a 4-hour basis right here, right? And we know that right in here, right? Right there. This is from the brief from last night. We know this is the first place that they're going to attempt to sell. Prior known sellers, all the sellers trapped in are right here, trying to get out. The next thing that we know is right at 557. Nice round number. Just above it, this is from the brief last night. I'm just drawing in for you. They're going to really get it on it right here. They're going to try to sell that, which they did. They tried. They're going to try to sell that right there.
3-month bills on September 16th.
And they're going to do anything they can to get price down where they got trapped in, right, or hemmed in, right?
On September 16th.
We got another place to be looking at. About 559.17 is measured.
Inflation have
right about there. You see it back here?
U.S. growth to slow.
Right over there, right?
Be reflected in October World
Right
Economic Outlook
there.
forecasts.
See it? Why? This is a point of control right here. Do you see it?
The U.S. to sell 13.
We're up over it, we're down below. We're up over it, we're down over it. We're up over it, we're down over it. Up over it, down over it, up over it, down over it, right? And then we got this other place right here, 562.
Sell $17 billion.
Right up in there.
Tips on
and you know they ain't letting this shit fly, right? There ain't no way they're letting that fly. Like a bunch of different places we can look for, right? For what? For them to get out of their trade. We also know where we trigger the spot up and vol up trade. It's up here. It's also above 5,600 right over here. And I'll show you this why this matters later. So this is spot up, vol up. We know that too. Any holding above 5,600 instantly creates a new gang of buyers. Now, here's what we're going to look at next. We're going to look at historical precedents. Whenever we trap in, if we were to trap in every large player once a month or once every 3 months, what would happen? We'd be blowing up hedge funds till there's none left, right? We'd be blowing up banks till there's none left, right? If we trapped in dealers and market makers, they would blow up. We wouldn't have a market, would we? So when we come back and we discuss, and I say to you, this is their market and not yours, they might get one in on each other or try to blow each other up or infight, but we're not a part of that, are we? This is their market. They will beg, borrow, steal shares. They will go to their buddies. They will whatever they have to do to stay a market participant. Even if they take licks, you might get blown up, but they don't. They're long-time market participants. And we also know from the discussion earlier that what the market gives you exits. I showed you earlier, I said, in the reversal, you were given one chance, two chances, and then you saw the reversal to the upside, and there's your third chance. The market moves slower than you really think. You just can't see it. And these guys in a larger time frame are going to be given an opportunity to get out of the market before the market decides if it's going down or continuing higher. So when I went to bed last night, first thing I'm thinking about before I go to bed is I'm writing the brief, and I'm going, on a higher time frame, regardless of outcome, if we're going to go lower in the market or to all-time highs or anywhere else, anyone trapped right now is going to be given on a higher frame an opportunity to get out. And then the market will show if we're going lower or higher. So they would be given the opportunity to exit and clean themselves up in their licks and their wounds. And then they can reposition for the move lower or the move higher on higher time frames. If we know that, that happens on a 1 minute basis, a 5 minute, a 15, an hour, a 4 hour, and a daily basis, and you're panicking, the only thing you need to know is right now on this hourly basis, we're on a 4 hour right now, but let's look at a 1 hour. And we can start to posit a few things, can't we? Right? We can posit that we're going to go up here. Probably fail that bar, right? We failed that one too, didn't we? That's looking pretty bearish, isn't it? Right? Maybe they give us one more up there, right? Maybe one more, maybe. And then a roll down, right? Something like that, right? And maybe one more roll down here. And then in my view, we go higher. There's your 1. There's your 2. There's your 3. What else can we posit from this? Prior lows, right? We now have some history here. So we can go just like this. There's 1. There's 2. Maybe it's slightly higher. Maybe there's 2 of them right there. There and right there. Somewhere in there, right? I bet we could posit that line goes straight down there. Making more sense now? Starting to get a clear picture here. Bam, bam, bam. And let's think about that now in the future. If this holds down here, if that were to hold, we don't break through it, make a new low. Right? Because then we would change our shit, right? These guys are now given an opportunity to get out. Right? They got burned over here. They should get out right here. That's where they should get out. And they should look for the failure if they want to get short again. Boom, take it down there. Get out again. And if we begin to break down, they get short again. Trade, trade, trade. Now, if we go higher here, they were still given a chance to get out before they got their asses handed to them because there was an expectation we'd trade 552. Make sense? This is a 1 hour frame, right? Do you see how everyone's given an opportunity to get out no matter what? No matter what the outcome is, higher or lower later, they're given a chance to get out of their bad trades. So my thesis is here, we're gonna lose this at some point. There's going to be a general roll to the downside. And I think we go all the way down here and go higher. Now, if we go down here and bounce and get a new high, I'm going to get all bulled up, aren't I? And be like, wham, let's take this thing up, 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 right? You had your chance to get out, sucker. I didn't take it. I thought we were going down there. No, asshole. You should have got out here, repositioned for there and there later. That's how you lose all your fucking money. And what do we have up here? 5,600, right? Do I care what happens in here? Hell no. Do I care if we reject it? Nope. Do I care if we go above it? Nope. Do I care if we go up here and back down again? Nope. Don't care. Don't even care. Am I executing along here to go up here and up here? No. Well, we'll try to do that one right there, but am I like, yeah, fuck yeah? No. Looking for like a low to grab. Looking for a low to grab to go up there. Am I in up here? Hell no. If we go up here and consolidate, make a new high, fuck yeah, I'm long right there. Money. Bam, bam. And what else is fascinating about this? Let's look and see. How is there still a spot vol up trade out there? Let's look and see. What could create that? Give me a second here. No, not that. This. We got a target right here. That's 5,600. You can trade that easy, Stevie. What else do we know about this? Bulls have to hold 55.50 on SPX. If bulls hold 55.60, that doorway is open. We got a lot of shit to grind through in here. But if we get above that, spot up, vol up, huh? That's 5,600 to 5,650. That's 5,700. That's 5,750. That's the JPM collar. And what's important about this, all this gamma up here? One, it matters right now.
$69.31.
It's gamma that matters. And number two, all that gamma was up here prior in time. And guess what they did to that gamma? They destroyed it. Whatever asshole was buying 5,700 Cs up here, 5650s, 5750s. I bet you those calls at one time cost $30 or $20 or $12.
For our real-time service.
I bet on this low down here they were worthless. Bet they were like $1. Fuck yeah, you get, I don't know, 20,000 calls up here for bank. We go all the way down here. Dealers sweep up the money like a vacuum cleaner. Dollar signs, dollar signs. Got to buy a new house for my wife and my kids. We got to go buy a bunch of cocaine in Vegas when we do the dealer conference in the springtime. I can't stand being in Chicago. I'm going to go down to Barbados for a week, right? Fuck it. Give them 5,600. And then you're going to get more buyers in there, right? Start juicing them, right? So it's possible and it's there. Now, can we get the spot up, vol up before we ever get there? Yes. If we did that, it's a low probability. If we did that, you'd probably see 2 or 3 hedge funds go bankrupt. Bankrupt. Short family offices, long or not long, like short family. You'd see a short only fund guaranteed blow up. I don't see that happening. I think they give them the out. It's normal. You get the chance to get out. So whatever this action, oh, look, we're going up again. Oh boy, oh boy, oh boy. That would go there, and then that would go there and fail right around there. You should get above it. I don't even have to draw that, do I? You guys already know that within this, you'd go, up, consolidate, maybe down, then up, and consolidate, and then boom, they'd sell you down before we ever get there. And that's the actual sell to the downside. And I would be very careful of whatever that is. Matter of fact, that's probably more like that right there. And then this is right there. Now, let's clean this chart up a little bit. Right in there. See it? Right there. Let's see how this goes. I bet I'm fucking right. Or more right than wrong. You should actually break out here, and then one more there. You might even have a liquidation break, but then wham, right up there. And look at that. So when you see me on public, go put the screws to them. When you see me out there and you see me on FinTwit and I go,
Intel
capitulate in all caps.
Intel's board has been convening.
Do you know why I'm saying that in public?
Including splitting it.
Because I know this is the pain trade right here. I know they have to counter trade long. I also know that it's coming back and they can get out at a certain point.
And saving up to 1,000.
I know it all. I know the whole thing before it ends. I know the book, chapter 1, chapter 2, chapter 3, chapter 4. I know they get out. But I also know where the pain is. And I also know what they're thinking. And that's why you see them rage on FinTwit. Make sense? I don't think you should start with any money as a beginner. I said it earlier. Paper trade. Get in the Discord. Meet people. I'm new. Who should I be listening to? Who should I wallflower on? That's it. It's that simple. Open up a paper trading account. Start following traders as they enter and exit trades. They discuss their trades all day long. They discuss the management of their trades. They discuss where the targets are. They discuss counter trades if they fuck up or if it goes against them. That's what they do. They do it in the pro channels. The pro channels are gangster. But even the general chat, just ask. Join it. It's $18 a month. It costs me more than that to run this shit. I don't make any money running this. I just had a conversation with Joe yesterday. I'm like, I don't make any fucking money running this shit. It just pays for itself, basically. So, not even basically. It just pays for itself. So, even after the taxes, I was looking at it. I'm like, I don't make a goddamn dollar. So, get in there and learn how to trade successfully or profitably, at least. If you're a new trader, you should not be using money. If you're a new trader, new investor, you should be taking your money and putting it into an investment. 5.25%, 5%, 5.5% returns. Buy S&P 500, sell ops 100 stack. If you can't afford SPY, right? So like, I don't have that much money, Cap. I got $1,000.
Issues.
Buy 100 shares of something you can afford that you can sell options on. Maybe if it has a dividend, that helped too. Any kind of dividend. And then start paper trading. And you do it again and again and again and again and again until you're winning not just more than losing, but more than losing and paying your fucking taxes. You're a winner. Out of every 10 trades, you're a winner, winner, winner. And you should be like big hit. If you have 10 trades, you should be winning about 7 of them. And at least 2 or 3 should be bangers. You can win like 20, 30%. But you need like 2 or 3 that are like grand slam. Boom. Pays off your losses, pays off your taxes, pays off all the fucking around, pays off a string of losses. You know, if you do 100 trades, you might have all 10 in one string, right? You get smoked out, you're done. So paper trading, paper trading, paper trading, paper trading to no end. All that copy trading too that I see out there, bad news. I mean, you can paper trade, you can copy trade paper trading, But if you're not taking every trade that other person is taking, or you're afraid, or you don't like, you're going to lose. You're going to lose. Don't be paper trading, or don't be copy trading people. Learn their styles. Take their tools. They're going to teach you stuff. And you're going to be like, I'm going to take that tool, this tool, that tool, this tool, and I'm going to trade my own style with my own tools. You have to do that. Have to, because you're not taking all of their trades. You can't be in there cherry picking what you think is their good trade. That guy might have just made $1 million or $100,000 and go, fuck it, I'm doing a lotto right now. And you're trading $1,000 and you're going to trade $1,000 on that lotto? No. Trade your own plan, trade your own tools, but get tools from me. Get tools from David. Get tools from Winky and John L. and E-Trading Shorts, and all those guys. There's a bunch more guys in there that do that shit gangster too.
Brent Crude.
You got John H. out there, Jimmy. You got all kinds of, even in the free chat and Twitch and YouTube, there are some gangster traders in there. They tell you their entries and exits always before and never after. Do not follow anybody who tells you after. If you're like, ooh, that guy just made $100,000, start following that guy and see if they tell their entries. If that guy's not telling you their entries on public first, don't follow him. Always before, never after. Don't get caught in that FOMO bullshit. And then they come out and they're like, oh, dude, I just closed all this. They're like, okay, where did you open it? I want to see it. Where's the post? You know what I mean? You want to see when they're opening and closing. And the cool part is you get to see when they lose too, right? Oh, man, he got fucked up in there. He was long. He just got torn up, right? But you want to be watching that. You want to be watching like the befores and then the after, never just the afters. Yeah. Okay. I think that's all I've got at the moment for you. What else? I think that's it. That's all I got for you. So, yeah, I'm not going to talk about I'm not talking about fair value gaps and the golden nugget on the show, and I'm not talking about fucking sessions in Asia and London and fucking US and any of that nonsense on a show. We're trying to find traders that lose all their money and make it simple for them. Most traders don't even want that. That's why you can't see. That's why you don't get 20,000 people watching those live streams, because it's complicated. It's for a trader that has time and market, that have already learned basic concepts. If you are a losing trader, this is what you need to learn to go to the next step.
So seeing a release from the Treasury here, U.S. fiscal 2024 year-to-date deficit seen at 1.897 trillion.
Oil.
This is the comparable fiscal last year.
You guys want to talk about oil?
$1 trillion deficit. The U.S. August budget deficit.
Not yet. We're going to talk about oil, but not quite yet. We are going to talk about it today or tomorrow, though.
Now versus August.
Yes, I will. How about this? If you guys give me a break, we'll talk about oil. You want to talk about oil? If you give me like an hour break, I can put it together.
$1 trillion.
We can talk about oil. Oil is going down, dude. Oil is fucking bearish until summer.
Budget gap climbs as debt interest.
Just not any rip on oil short.
That's the U.S. budget.
Anytime you see a squeeze on oil, short down to the depths of hell.
October through August.
You short oil to the depths of hell on any squeeze until I say otherwise. I've been saying that now for like 6 months. You guys are like, look, it's bullish right now. I'm like, yeah, it's just another chance to short it down to the depths of hell. Any chance you get, you short oil to the depths of hell. I don't care what they do. I honestly don't. And I'm going to show you why later. I'm going to show you. I'm going to show you today why. I'll show it to you later today if you want to see it. I got the juice. I got the juice on it. You see like a war start and like oil goes to like $20, start shorting it again. That war's gonna end in like next week. Short it down at the depths of hell. It's in this like major downturn of a cycle. Like if you were to look over like 20 years or 40 or 50 years, it's in this like big giant cycle like this, and it's like right here. It's gonna go right down there. This would be like September, and that's like July. It's going down. You might get like a $30 squeeze for like a week or two. It's still going down to fucking $30. It's going down to the depths of hell. And this is like been proven for like fucking 80 years. It's going down to the depths of hell, trust me.
General Motors ticker GM is in talks to buy Chinese batteries made in the US by Japan's TDK. That's according to Bloomberg.
Another note here. Notice how we're grinding. Do you know why we're grinding? Why we're not squeezing right now? Anyone know the answer to that? Maybe Career Low is here. He could tell everybody why we're not just squeezing. Maybe he'll tell everybody. Give me a second here. We're not in spot up, vol up, right? Where we squeeze. We're not in what? Let's take a look together and see. There's no volatile events. Well, there's a euro settlement coming where it close. Right? That will be volatility, right? But so we're in what right now? Hey, look at that. We're in positive gamma. So for us to make a larger move down, what do we need? Volatility. Otherwise, we're going to grind, aren't we? And we're building a base right now. So if we don't get any volatility, which we have a 30-year note coming, TLT, TMF, we're going to grind, aren't we? If we break out, though, above 5,600,
the US sells 80 billion.
Spot up, vol up, right?
Prior high yield 5.08.
If we don't roll down and let these sellers out and we keep them reined in, if they're trapped, we go above 5,600, spot up, vol up. If any bad news comes and we get underneath the gamma flip, we'll talk about moving fast, right? Hard and fast.
Just an update here.
Otherwise, we're going to grind, aren't we? Grind. At least in cash market, without any negative. Half an hour trigger about to cross the daily trigger.
And the US
So it is possible we get a roll down on that news, right?
Versus the comparable
Cross right there, magnet, wham, just to make sure.
And in terms of Orgip,
and you have a cluster of a 4 or 5 trigger cluster. This is the out
in August 2020
for bears.
Receipts 307 billion.
Right? They get their out of the trade. Just checking to see if we're going to 5,600 or not, or we roll down to the depths of hell. We're not quite there yet, but we're almost there. So as soon as you see this half-hour trigger cross the daily trigger on SPX or futures, or SPOOs or SPY. Well, right now we already have the half an hour triggers already crossed, but more specifically, SPX is going to be important. And I don't know what ES is doing at the moment, but keep your eyes on that cross above here for that roll down and check back. Hopefully the bears can get out. I hope you can get out if you're a bear. I'll be honest, I don't want to see a seller get blown up. I don't want to see anybody get hurt. Truthfully, I hope that if you're a seller, you are able to get out. And I want to tell you one more thing about this. If you are a seller, one last thing.
Just making you aware that
this is an important one.
It was meant to be released at 7, so we did get an early release. And just going over that August deficit, so that was
right in here.
Billion, so that was a larger deficit than was expected.
If we roll right now,
17.3.
if we roll right here, if we roll up here and we go down here, get out of your fucking trade. Do not care if we head lower afterwards. Unfuck yourself and reposition yourself either here or with a new low over here. Always unfuck yourself when the trade goes against you. Too often you'll see someone that's in the wrong positioning, they get burned, they're given a chance to get out, and then we go up. This is in the reverse too, but then we go up and they're like, "Oh my god, I could have gotten out of that fucking trade and now I'm really on fire." I got to go to my wife and say, "I lost everything. I lost the house, I lost everything, honey." And you are the guy stuck at home going, "There was a chance for me to get out before they ripped me." You're always given a chance to exit, and you're always given a chance to reposition regardless of outcome, up or down. Burn that in your brain.
Shortly expecting the results of the 4-week bill auction.
2020 hindsight trading will be the end of you. If you're like, okay, listen to Captain Jim James, he said get out and reposition, but then we kept going down. I could have made $1 million. If you run that trade 100 times, you'd be better off than doing the hindsight trade. I had 2 hindsight trades this week. Both dips I bought. I would have made, I think the first day I would have made $100,000 to $200,000. Yesterday I would have made about $300,000 or $400,000. I didn't make that money. I made money. Does that change my system? No. It does not. It's actually poison to even think that I could do that day in, day out. I'd be a billionaire. I wouldn't be doing this fucking show if that was true. Would I? I'd own an island somewhere. I wouldn't even be making videos on a jet, would I, if I was that rich? I'd be like Warren Buffett trading. So don't look at yesterday as like the, I said something like, I could have fucking been pretty well off on 2 trades. No, they all fake those jets. They don't own those jets. You can rent a jet for about $1,000. Did you know that? Those like little private jets, the little ones. You can rent them for like $1,000. They're dirt cheap. Not even a fake jet. Not the one in the. Not the one they fake their pictures and shit. The video thing. You can get one roughly like I think a bottom end for a quick flight is about $1,000. It's pretty cheap. You can get them a little bit cheaper. You get other people on the flight. You can get them for about $1,000. In Michigan, you can get them for like $1,000 for like an hour flight. You charter the whole entire thing. It's about $5,000 for a shitty one. It's like just you on the jet, about $5,000. The nice ones are about $10,000 an hour, right? But about $10,000 for about an hour. For like a dope jet, about $10,000 per hour. If it's just you on that jet. What up, career low?
4.965%, 4.965%. Bid to cover ratio.
Career low is telling them about 2 other things we haven't talked about yet. Well, we have, but we haven't. We've brought it up.
Bills and awards
Vixpiration and OpEx, right? Where dealers give a flying fuck about what? Tell them about it. Tell them about career low. Tell them about Vixpiration and OpEx. Oh, I lost it. The show again, dudes. Guess what I found out? I think I am being fucked with. I think, are you watching me on YouTube still or no?